The ARK Innovation ETF soared over the early pandemic, making Cathie Wood a household name. Today, we're going to take a look at how it's performed along with its #1 holding. I'm Jared Blickery, host of Stocks in Translation. Wood's flagship fund, it was founded in 2014, but it really hit investors' radars in 2020, betting big on technology and disruption, major pandemic themes. And as we're about to see, this ETF's fortunes have swung mostly thanks to one single stock, Tesla. Check out this wild ride. All these charts I'm showing, by the way, start right before the pandemic in 2020. ARK skyrocketed from just $33 in March 2020 to almost $160 in less than a year. That's a nearly 400% moonshot. And it was fueled by retail traders with those stimmy checks and meme stock FOMO. It did have some bubble vibes, admittedly, but as the pandemic stimulus faded in 2021, the ETF dropped a brutal 82% from its peak before staging a modest recovery recently. Now notice the number of stocks in ARK, how it moved alongside its price. Into the frenzy of 2021, the ETF bulked up to nearly 60 names, but when the bear market arrived, that number fell sharply. From peak diversification to a tighter core, ARK got leaner as the fund rapidly lost value. But through all this churn, one stock held its place at the top, Tesla. From about $200 million at the end of 2019, ARK's Tesla position soared to $2.4 billion at the peak. Even today, it's the only stock in ARK with a position consistently above $500 million. So it's no surprise that ARK's fortunes are tied to Tesla's. Now, in this chart behind me, you can see the link between Tesla's stock price and ARK's Tesla holdings. But watch this carefully. Even when Tesla's share price was moving sideways recently, its relative weight in the fund continued to grow. Why is this? Because ARK trimmed other positions, increasing Tesla's weight. This shows that it's not just Tesla's price that matters, but also the portfolio rebalancing. And that happens at ARK's discretion on a daily basis. And this final chart drives that point home. Tesla has rarely been less than 8% of the entire fund, but as assets fled, that share spiked, at one time making Tesla 1/6 of the entire ETF, a huge reliance on this single stock. ARK made a name by embracing disruption, but its commitment to Tesla has been a stalwart over this fund's roller coaster ride. Thursday, I'm going to take a look at how the rest of the portfolio has shifted and who could step in if Elon Musk's Tesla truly stumbles. ARK Innovation Fund has always been about disruption, so Cathie Wood's flagship fund was right in the place at the right time as the pandemic demanded different kinds of thinking. But times do change, and so do disruption themes. So let's track the ARK Innovation portfolio shift over the last 5 years. I'm Jared Blickery, host of Stocks in Translation. Here behind me is a look at the top 5 position in ARK by market value at 2 different times, before and during the pandemic boom. Now, back in December of 2019, Tesla led with a modest $200 million position. Fast forward just over a year, ARK's Tesla holdings ballooned to $2.4 billion as the fund's total assets exploded. The entire fund family was up nearly 400% from its pandemic lows. The ETF's holdings doubled to about 60 different names, adding big bets on remote favorites like Teladoc, Roku, and Shopify. But when the pandemic euphoria faded, so did the Innovation Fund. It lost 82% of its value from peak into December of 2022. Now check out its top 10 holdings here. Zoom led the fund with nearly $600 million, and fast forward to today's portfolio, we can see a significant shift again. Tesla is back on top, $750 million, followed by newcomers like Coinbase, Roblox, and Palantir. ARK didn't just shrink, it rotated into themes like gaming, crypto again, along with some early AI plays. So anything tied to disruption must necessarily reinvent itself. Now, let's take a look at the biggest holdings from April 2021. That was a peak, and ARK has completely eliminated a lot of these. Teladoc, once a massive $1.4 billion position, has been entirely exited. Also gone are once hot stocks like Zillow, Zoom, Spotify, and Baidu, each formerly worth $700 million in ARK. Take Zoom, for example. It fell 5%, from 5% of the portfolio to 0 as its stock price collapsed from about 80% over the pandemic bust. Now, finally, here are some stocks that ARK has increased its bets on the most, measured by the change in portfolio weight since April of 2021. Coinbase, you'll see there, was added shortly after its IPO. This was an unusual early move for an institutional investor. It's now about 9% of ARK, up about 7 percentage points. Palantir, another name, showed early institutional interest from ARK, added about 5 months after its IPO. It's now 5% of the fund, up nearly 4 percentage points. ARK also increased its already large positions in both Roku and Tesla, which has been its largest position for years, by the way. These names became more prominent even as the fund shrank, showing high conviction. And today, these 5 stocks represent almost a quarter of the fund. Now, arguably, the ARK journey has mirrored the Gartner hype cycle that Cathie talks about often. From peak excitement through a tough trough, now onto a path of more sustainable growth. And with many of the names on a more solid technical footing, we'll have to see how far ARK can climb again. And tune into Stocks in Translation for more jargon-busting deep dives. New episodes on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.